Hi everyone, welcome and thank you for joining us. This is Let's Grow Kids' fourth webinar. This one is titled Taxing Times, What You Need to Know About Tax Planning and Record Keeping During COVID. I'm Emily Blistein, I'm the Director of Business Strategy at Let's Grow Kids. And for today's webinar, we're going to spend the first 25 minutes or so on an overview about issues of taxes and record keeping. And we're also gonna do a few brief updates from past webinars and stuff to be aware of going forward. We're joined today by Lawrence Miller of Five Vine Consulting, Stephen Trentholm of Gallagher Flynn, John Holler of Downs Racklin Martin, and John Holler of Downs Racklin Martin. As usual, we are recording from our homes with kids and animals and internet of varying reliability. They've gone really well so far, but we're just going to continue to do our best, and we hope these have been really beneficial for you. Just a reminder, we can't see or hear you. You are muted. If you do have a Q&A, it's really tempting to put it right there in the chat bar, but we would ask that you actually put it in the Q&A, which is just to the left. And that will help us both be able to, when we have the question and answer section, we can more easily go through the questions. And that also lets us record your questions. And we've been turning your questions into FAQs and other resources for us to help know how to help you better. So it's really helpful for us when you put them in the Q&A section. A few other reminders and updates. We are really happy to report that these webinars are available for professional development. They've been approved through Northern Lights. A big thank you to Paula and Ansley from our team for making that happen. To receive credit, you did need to register with your BFIS number, and you do need to remain on for the full hour. If you have any questions about that, Ansley's email is at the bottom of this slide, and she can help you out. But that does, for the future webinars going forward, that should hold as well, that you should be able to get professional development credit for it. As always, if you're interested in any other information or resources, I realize every one of these webinars I've been mentioning our coronavirus webpage, and if somebody said that to me, I might totally blank out and forget where it is, so we wanted to give you an actual visual. The coronavirus is the header. There's a little bar on all of the Let's Grow Kids pages. You just click on that, and then you'll see this drop-down accordion. You're going to want to click on the resources for early childhood education programs, and that will bring you to our past webinars and other resources specifically for early educators. Let's see. So those are sort of the big overview for you, but if you have specific questions, we do also want to remind you that we've put up a new service for you, which is some one-on-one consulting that's free for you. And as you can see on this page, when you click on the resources for early childhood education programs, at the bottom of that, there's a web form that you can fill out. So if there's a question that you have, we can use that to actually match you with one of our experts here, and that will be a free resource for you going forward. It also helps us figure out what questions you have so that we can think about next topics to have on these webinars. And we do have the topic for our next webinar set. That is going to be about the state of childcare, both locally and nationally. So we encourage you to register for that one as well. Finally, taxes, I just want to mention, taxes may be a stressful topic for a lot of people. So we really want to give you some good information to go forward. But if you do start thinking about this and you feel overwhelmed by it, I would really encourage you to go back to last week's webinar, which was about self-care. So it really does have some good resources to help with that feeling of overwhelm, to help you start bucketing some of those concerns so that you can take a few actionable steps toward feeling prepared rather than feeling overwhelmed. I think that's just about it. So with that, I'm going to turn it over to Lawrence Miller first, who's going to give you a few updates, and he'll turn it over to Stephen and then John. Thank you again.
Thank you, Emily. One thing to note is that while people are beginning to be allowed to go back to work in small work units under the governor's relaxation order that took effect on Monday, that doesn't mean that those people who may go back to work are necessarily meeting the definition of essential workers for childcare purposes. So you may begin to get calls from parents who are looking to bring their kids back into the programs, and they may not yet be qualified to do that. So you're welcome to push them over to the web form for essential workers that does that matchmaking so that they can make a pitch to be deemed eligible for childcare services at this time. But I think that'll be resolved over a little while here. But at this point, that's an important differentiation to keep in mind. Also, this is the week when a lot of money began to move. On Sunday, the treasurer's office cut checks for about 8,500 people who are still stuck in the unemployment insurance queue. And the Department of Labor processed, I think, 43,000 claims this week. So we're starting to see benefits move. For those of you who are on the call who are self-employed among the smaller child care centers, I think today is also going to be the first day that people can apply for pandemic unemployment assistance. And this is the program that's using federal dollars for those people who have not previously been subject to state unemployment insurance. This is a way for you to access benefits at least the minimum state level of $191 a week, plus the federal benefit of $600 a week. So if you're at a closed center and you fit those characteristics, that may be something you want to explore.
Hey, Lawrence, can I just jump in for a second? Do you know how, excuse me, how the state is going to calculate the benefit level for the unemployed under the pandemic unemployment assistance?
Yeah, I think they're going to be looking to your 1040 Schedule C as a way of understanding what you're foregoing from a revenue perspective. But what they'll do is, if there's any doubt, they'll just go ahead and enroll people at that minimum level. And then when they work through the financial calculations with tax data or other income substantiation, then they'll go back and make a retroactive award to rebalance people.
Thanks.
And I will turn it over to Stephen. Oh, sorry, there's a question that I will just address right off the bat. Laurel asks if how the federal dollars are paid to the unemployed. That those funds have been distributed to the state, and the Department of Labor just includes it in people's check. So as soon as they file their weekly claim, it just automatically happens. And that's true with, as the Commissioner of Labor put it, the first dollar of state unemployment eligibility picks it up. If it wasn't included originally, as you continue to file, it'll get caught up. Theoretically, everything is going to go retroactive to your separation date. Stephen.
Thank you, Lawrence. Tough act to follow there. Paycheck Protection Program, the PPP. I won't bore you with any more details because that's all people have talked about over the last few days. The one thing I will tell you is legislation has been moved forward through the Senate. The House expects to pass it today and should be online, and the president sign it tomorrow to put another $300 billion into the Paycheck Protection Program. So if you haven't filed an application with your local bank and you're planning on doing so, I would get ready, because it took only 2 weeks for $350 billion to go last time. So we're telling all of our clients, if you didn't get the last round and you hope to get this round, try to get in line as quickly as possible. The question mark, forgivable. What I want to tell you about that is, please don't fall into the trap of thinking this whole thing's going to be forgivable. There are specific guidelines with respect to the forgiveness of the PPP loan. We're also waiting for some guidance on that as well. But basically, just be aware that if you don't restore your head count to where it was prior to this whole mess coming out, there could be a possibility that you will not have total forgiveness. Same with payroll levels, if you cut people's pay, there are some restrictions there. So that's something to be aware of. And the last thing about the PPP program is, I say, is the forgiveness really tax-free? They say it is. However, there's a glitch in the way the law was written, and it's as such that the intent was for this to be tax-free, and you would be able to deduct whatever wages, rent, utilities, et cetera, that you paid with it. And that's not the case as it's written, because there's one code section that they left out that says any expenses related to tax exempt income, which if this is forgiven, it is, then those expenses are not deductible. So stay tuned for that. Hopefully they will come out with a fix for that before the forgiveness starts. And remember, the forgiveness won't start until at least 8 weeks or after from when your funding comes, because that's the time frame that you have to spend the money on the PPP program. The economic injury disaster loans, those ran out fairly quickly, but they are going to be, that's something that's also going to be funded with additional funds as a result of the second round of funding. That's something that you might look at if the PPP program doesn't fit what your needs are. The employee retention credit. The one downfall of that is you can't use that if you have the PPP loan. If you've gotten a PPP loan, whether it's forgiven or not, you can't use the employee retention credit. The employee retention credit comes in handy for someone who knows that they're not going to be able to restore their head count, but they still have payroll going on. It's a way of getting some of your money back through payroll tax credits. And last but not least is the employer 6.2 Social Security payment deferral. Again, something that is a little bit of a help for people that have a number of employees. What that basically does is you can defer half of your 2020 Social Security payments, the employer portion, until 2021 and 2022. And that is a refundable, also refundable, because the way it works, is if you go back to, if you can go back to that, there you go. The way it works is you can continue to defer and not make your payroll tax deposits until the point in time where you're notified that your PPP loan is forgiven. So this is one that can be used with the PPP loan, but once you get the forgiveness, you can no longer defer any of these taxes. So just yet again, another source of cash flow. And then the last thing is, everybody knows the SBA, there are SBA loans out there with extended terms and lower interest rates. So that's also something to consider. So now thank you. So tax benefits that passed in the CARES Act. Again, I'm going to preface this by saying these are things that if you think you have any ability to cash in on this, please see your accountant, because they're the ones that are going to be guiding you through this, and they'll be the ones that'll be preparing the filings. The first one is the ability to carry back losses that were incurred in 2018, 2019, and 2020 back for 5 years. The ability to carry back any net operating losses went away with the Tax Cuts and Jobs Act, which was passed in December of 2017. They've allowed for these 3 years the ability to carry back any losses. Basically, the idea is it's pretty much that people in 2017, 2016, 2015 probably had better years than 2018, 2019, and 2020. It's a way of carrying these losses back and getting a refund. That applies to both individuals and corporations. And the other thing that came with the CARES Act is we in the profession like to call it the fix of the retail glitch. If you did any improvements to the inside of your facility and your facility is non-residential property in 2018, 2019, and 2020, that will now be eligible for 100% bonus depreciation. So again, another way of potentially amending returns, or in 2020, getting back, being able to do catch up and getting back some additional cash flow. Record keeping. Well, first thing, tax time, was it extended? Yes. Everybody except for me is probably thrilled to death about that, because for everybody, it gives you extra time. For me, it extends tax season to July 15th from April 15th, but that's okay. We love what we do. But that's important because on July 15th, everything will now come due. And if you do need an additional extension, you can extend for the additional time that you normally would have gotten. The extension of time that was allowed from April 15th to July 15th was automatic. You had to do nothing for it. So if all of a sudden you realize, oh no, I didn't file my extension, you're still safe. And that's an extension of time to file and to pay. Year-end surprises. Those are not fun when your accountant says, did you know you owe $10,000 for taxes, when you thought he was going to say, did you know you were getting a $10,000 refund? Why do I bring that up? That's why good record keeping comes in handy. And it really is a must in planning your cash flow and running your business from a day-to-day operational standpoint. And this is a funny year for everybody, because any of the subsidies that the state is giving you is still ordinary income. If they don't fix the glitch that I mentioned before with the PPP loan forgiveness, you now will have income from the state, and you'll have no payroll and partially no rent for 8 weeks to offset those that revenue. So depending on the magnitude of your operation, that could be an issue, and that could cause you to get an unpleasant surprise at the end of the year. So I would encourage everybody to keep good records and try to figure out where you are on a monthly basis going forward. One of the things that a common question is, do I have to set up a separate account if I get the PPP loan? And the answer is no, you don't. But if you do, here's a way of managing the funds. You can set up a separate account and transfer the money for payroll into, if you have a separate payroll account, if not, into your regular operating account, and transfer 25%, which that's allowable under the PPP program and forgivable. Transfer that amount for rent and utilities into the account that you would use to pay the rent and utilities. Again, if you don't use a separate account, you want to make sure that you run a payroll report for the 8 weeks beginning with the date that you receive the proceeds. That's going to be key for forgiveness. You want to prepare a schedule documenting other allowable costs that you paid during the 8-week time period, and have a schedule of rent and utilities paid during that time. You want to have reference to the proof of payment, date of payment, who the vendor was, etc. And when you do apply for forgiveness, you'll already have the documentation that you, as far as we know now, that you will need. Last bullet point is, one of the key things is you had to have leases and utilities in effect prior to February 25th of 2020 to make sure that those bills got forgiven as part of the PPP loan. So I would have a copy of leases and a copy of utility bills for January and February of 2020, just in case when you go to the bank and apply, they ask you for that kind of documentation. Last, I don't want to talk too much about unemployment because Lawrence did a great job of covering it, but I just wanted to bring home one of the things that people talk about is, gee, I'm making more money on unemployment than I would have made it if I was taking my normal salary. When those employees are called back to work, if they elect not to come back because they think they can make more on unemployment, Under the rules that have been out there for a long time, they will no longer be eligible for unemployment if they're not still on furlough or laid off. And then the last point is, don't forget that unemployment is taxable income for federal and Vermont taxes. So if you are getting that check and there's nothing withheld, you either want to set it up so that you can have withholding, or you want to put some money aside, because that may put you into a position where you're going to owe some money at the end of the year as well. And now I would like to turn it over to John Holler.
John, you actually remuted yourself.
There we go. Sorry about that. All right. Good afternoon, everyone. Happy to be here. So many of you may be familiar with the federal dependent care assistance programs. I'm going to talk about those for just a few minutes and how those benefits under those plans interact with the child care stabilization program. So these programs, as you probably know, allow individuals to use pre-tax money to pay for child care expenses. So parents can claim the credit if they pay someone to care for a dependent child who's under age 13. These benefits also can include amounts that an employer pays to an employee to care for dependents, the cost of child care that's provided by an employer, and also pre-tax contributions that someone makes under a flexible spending account. So federal law requires that in order to be eligible for one of these dependent care benefit programs, the expenses have to be incurred to enable the taxpayer to be gainfully employed. So the question has arisen about as to whether or not parents who are making payments to child care facilities pursuant to Vermont's child care stabilization program qualify for that under that federal law for these dependent care programs. The payments are made to ensure that the child retains a place with the child care facility, and the question is whether that qualifies or whether that meets that standard that enables the parent to be gainfully employed. The answer to that's really not clear. Payments made to a child care facility under the child care stabilization program could be argued that they're made to ensure that the parent has a place for their child to return when the governor's stay-home order ends. But there are some IRS statements, some guidance information that suggests that payments for anything other than a short temporary absence from work don't qualify for these tax credits. So this is a unique program in Vermont. The question has likely not arisen with the IRS. So we've been working with Let's Grow Kids and we'll be seeking a clarification of this issue from the IRS, working through Vermont's congressional delegation. So in the meantime, we're happy to answer any questions that you may have about it, but no clear answers, and we'll be hoping to get some certainty from the IRS in the future. So turn it back over to you, Emily.
Hi. Emily, did you want to go ahead?
Nope, go right ahead. Thanks.
So I'm Brenda. Welcome all. It's nice to see you there and well, to have you here and to see your questions. And if you have been, sort of pondering what this might mean for your program, now is a great time to ask the panelists who are right here with us. If you think of something after, please fill out that form and ask the question and we'll connect you. And we also, as Emily said before, put out answers to all of the questions that get raised. And I'm going to just share the ones that you've posted, and we'll let the panelists check in as panelists. As you have something to contribute, please feel free to just jump in. So the first question is, are we eligible for unemployment if we use the stabilization program?
John, do you
Lawrence, you want to, either one of us, I think, could jump in on that one.
Yeah, I think the short answer is if you're getting stabilization money that's adequate for your cash flow needs, then you wouldn't want to pursue unemployment instead of the stabilization income. That would be income that you would reflect in your weekly filing. to the extent it's available to you. If your circumstances are such that that stabilization grant is entirely used on staff expenses, that may be a different question. John, do you want to add anything?
No, I don't think so. I guess there's really two parts to that. One is the individual. So I assume you're talking about the potential for self-employed, the pandemic unemployment assistance as a self-employed entity. And I think the short answer is they're mutually exclusive. I don't think that it would be realistic to think that you could obtain unemployment assistance if you're also receiving stabilization grant money. I mean, I suppose there's a possibility you could have partial unemployment if you weren't being made whole under the stabilization program. Trey might be able to speak more to that, but to the extent that you're being made whole or close to that, I think they're mutually exclusive.
Well, I will, John, thanks for that shout out. I will just jump in and add, this is Trey Martin. I'm the general counsel at Let's Grow Kids. And if you've been to the past webinars, I've been able to participate in all of those that we've offered. And we've certainly been hearing a lot about how stabilization interacts with these other programs. So first, I want to remind everybody that one of the requirements to participate in stabilization is that you retain staff at their normal wages. So if you are doing that, it would be hard to visualize a situation where you'd be putting people even onto partial unemployment and keeping them. Now, there may be situations where there is especially in the independent school realm, or you might be able to imagine other scenarios where there are staff who are not somehow in the operations related to the provision of care. And so you may have some employees who it makes sense to do partial unemployment for, or a partial furlough for, because they're not who the CDD is thinking about when they say that you've got to keep people on full wages. This is one of those places where if you're in that situation, you want to understand better, please let us know. You can use the web form to send us that question, or just reach out to Emily or Brenda or myself and say, hey, I've got a bunch of different programs, so I need to really understand what to do. We'd be happy to think that through with you.
Mm-hmm. Thank you. So how can you check on the status of the EIDL? Because I've received a confirmation number, but I haven't received any funds yet. Is there a way to check on that?
Yeah, we haven't been able to find any way to check on that. This is an automated process at the SBA. As of last reporting, about 1,700 Vermonters received loan advances, the grants under that program. The ones that I've talked to, it's just magically appeared in their bank account one day with very little in the way of advance notice or correspondence. So it did lapse in funding. So it may be that while you got a confirmation number, you didn't get into that first bucket of available funds, and you can expect further processing after Congress restores funding for the program.
So check your account daily. Or not, if you don't want to make yourself crazy. Can someone please explain how the Paycheck Retention Tax Credit works?
Sure. Well, it's actually the employee retention credit. And basically what that does is it is a credit against your Social Security, your portion of the Social Security tax for 50% of the first $10,000 of wages that are paid to someone that works for you or yourself. And if you're not self-employed, there are two criteria that have to take place. One is you're subject to a state shutdown, which we all definitely pretty much are. And the other one is that you suffer a 50% or more decrease in your receipts compared to the quarter for the prior year. And this is done on a quarter by quarter basis. So the maximum credit would be $5,000 per employee, and that's capped at $5,000 per employee. And what you would do is you would reduce the amount of federal and Social Security payments that you would make via your 941. You'd reduce by whatever your credit is going to be and pay the difference, or if your credit comes out to be more than what you've already withheld from people, then you basically file your 941 for the second quarter, and there's a Form 7200 that you can ask for a refund. I will say that the confusing part that confuses everybody is it's technically a credit against your employer share of Social Security, but because it's refundable, you can get back what you withheld for federal and employee Social Security as well.
Steve, I think I have another question for you. When are SEPs due?
SEPs are now due July 15th because generally the rules for due dates for SEPs haven't changed. And because your tax return is due on July 15th, your SEP payment is due on July 15th as well. And as far as we know, that is also, if you actually did file your tax return, you still should have until July 15th to make your SEP payment.
Thank you. Let's see. What about an employee who has young children at home who will need to be cared for once the governor lifts the ban and the center is receiving stabilization funds? Can someone speak to perhaps the rollout there? Which I can speak a little to, but I'd love to hear what other folks have to say.
Yeah, I think this is one of those areas where the Agency of Commerce is not, or had not as of earlier this morning, issued guidance on how they will review essential worker determinations as this unfolds. So I think as you're approached by parents, you will, for the near term, I would say the next few days, need to push them back to the essential worker form and have the state make a determination as to whether or not they're ready to come back.
And the CDD is going to be offering some guidance about how childcare will come back. Once we open, will it be phased? Will it not be phased? And they're giving that serious consideration right now. They're trying to consider every angle. They've asked for some input, and so I know that they're giving it serious consideration, and they will share that information as soon as they have decided in conjunction with those other departments, other state agencies. Thank you for that question. So here is one that we have had, I think, every week so far, and there is no clear answer, but there is information that can help you make an informed decision. The question is, as a registered in-home childcare with no employees, which program or programs should we be utilizing? Does anyone just want to recap how we have not told you, but we've given you some information from which to make an informed decision?
Trey, you want to take this?
Well, this has been a difficult question to answer week over week. And one of the, in terms of guidance, the first thing that we're urging everybody to do is to understand your individual situation as well as possible, and either come to us with a sort of a more considered and personal story so that we can help walk you through all the different contingencies of what you're doing, or to take that to Katie and to folks at CDD and sort of say, hey, here's the situation that we're in, and we are really having a hard time making a decision here. What, if any, guidance can you give us now? What do you expect? How do you expect this answer might change as the crisis goes on? And should we be thinking in different phases of how we respond here? So I know that's not like Brenda said, we've been hesitant to give a definitive answer in these webinars to this question because it really is so individually based. But we also do want to work with you, and so this is a perfect example again of how and why you might give us a call or contact us through the web form.
Yeah, we recognize that every program has its own nuances, and in the slides from the previous weeks, the first 2 weeks especially, the panelists laid out some of the pros and cons. So that would be a source where you could sort of read the pros and cons of the different options and perhaps have a better idea as well to make that decision. So another question, we have laws in place that protect employees from disclosing and discrimination regarding medical information. What happens legally if a program cannot force an employee back to work due to COVID-related increased risk, and therefore they need to replace the worker? Is this a temp hire? For how long can medical be excused? And what if over time the temp is a better fit for the program?
Yeah, this is an interesting area because there are both changes in the federal Family and Medical Leave Act requirements, changes in how businesses can be reimbursed through payroll tax credits, a different form of payroll tax credits, and changes that the Vermont legislature put into place. Clearly, you need to work through all of the leave obligations that you have under law first. And those are a combination of paid and unpaid leave options, and make sure those are fully taken. You would certainly be well positioned to hire a temp into that position. You really are not in a position to terminate that person's employment during those protected periods. Once you get out of those protected periods, you should be providing them with a job or a similar job at that time. John, you want to elaborate?
No, I think that's right. I mean, you're going to have to take that person back. You're not going to be able to terminate them as a result of their COVID-19 illness. So that, and you'd hire a temporary person, but not on a permanent basis to replace that person and terminate the individual who was ill.
So, and just to put a finer point on that, say they don't actually have COVID, but they're concerned about their own well-being. Does that change anything?
I think I'd want to, we have an employment group. I'd want to look at that one. I think that would raise another question. I think that would not put them in a protected class, but I wouldn't want to make that a definitive statement here. But I think there may be some subtleties there, but that would be a different question, and I'd want to pursue that a little further.
Yeah, that specifically, there's some question there about, how I think it's Act 742 in Vermont would be construed in that circumstance.
That might, go ahead.
I was just going to add in one thing and just say that I think for non-attorneys out there, John said a couple of magic words there, and one of the things that he just mentioned is people who are in a protected class. That's a legal term of art. There's federal and Vermont law that defines employees who have sort of special protections around employment-related decisions, and it's a pretty complex area of the law. The simple, straightforward advice that lawyers like John and I, who have a more generalized practice and don't specialize, every day, all day in employment law, is that any decision you make with regards to your employees should really be equity-based. It should maximize their ability to retain their job through either your existing benefit structure and working them through that. So, as John and Lawrence noted, through your leave policy, your, including paid leave and unpaid leave, any other policies that you have to support people, and through any, even if it's not illness related, but through any kinds of supports they need to be more effective. It's much easier to move somebody on, and if you've exhausted all of those avenues of making them a really stand-up employee for you, and you've documented it really well, and you've made good decisions all along. But it's the safe harbor is approaching it with an attitude of, I'm not trying to move this person along, I'm trying to make this work for them. So here's how I'm going to keep them in spite of their illness. Here's how I'm going to extend my benefits to them, and to the extent that they need to be retrained or have more supports as they come back to work, or for any other reason, here's what I've done to really take care of them. If you follow that kind of mindset with this, it's both probably taking you in the legally right direction, but it's also going to really kind of protect the story and the narrative that's created in your relationship with that employee. And that's always important too, if things get disputed later on, that you have the story you tell is all the things that you did to support within the framework of your operations.
And a couple of times I heard the word policies. Now may seem like a time of what can we be doing. Well, now is a great time to review your policies and to think about what you need that you didn't even know before that you need. So there, I will just take this opportunity to plug, and we'll talk a little bit about it in a few minutes as well, that there's a resource that many of you already use, but if you don't know about Shared Services Vermont, you can just Google Shared Services Vermont. We're also going to put the link in the notes, and it will go out in the email that you get after the webinar. Access the Shared Services Vermont site for policy templates and templates for cash flow, profit and loss worksheets, budgeting, planning, financial planning, all sorts of resources. And I see that it just went up also on the chat in the chat bar. So I want to move to another question. And this is another one that perhaps we've addressed before, but I think it's one that's still on some folks' minds. Can you participate in both the EIDL and the PPP?
Yes, you can. And the only criteria is if you get if you get a grant that you don't have to pay back under the EIDL, then that will reduce whatever you can be forgiven on the PPP side, but you definitely can participate in both.
I would just clarify or ask, Steve, doesn't it also require that they be used for different purposes? So you can't obtain an EIDL and a PPP for the same purpose. So, for example, obtain employee.
That's correct. You hit the nail right on the head, John. Usually people are looking for the EIDL to do other things with, to other expenses. But if you're using the PPP for payroll and some rent and utilities, you shouldn't cross over. And again, bear in mind that the PPP loan only measures it for that 8-week period. EIDL is for the duration of the loan. So.
And in a previous webinar, Lawrence had sort of fleshed that out. He took it out a little further. So again, if you have opportunity to access those resources, the previous webinars, there's a little more information about that. Thank you for those answers. Let's see. So here's another one that we all want to know. How do we get answers to our questions with Katie Lavallee at the CDD and those other folks at the state who were encouraged to reach out to when they're not responding via email? We have specific questions that are leaving us stumped as to how to move forward. That is, I think we used to say the $64,000 question. Maybe now it's the $1 million question. What I can tell you is that I know that Katie used to be the solo person answering the questions, and 4 additional people have been hired and I believe are now trained. And so they please continue to submit your questions, but only submit each question once, because what's happened is when folks weren't getting a response right away, they were submitting the same question over and over again. So it created a bit of a bottleneck, which just makes more for the folks who are answering your questions to sort through and excuse me, and categorize as, but if you haven't submitted a question and you have one and you have already looked at the FAQ and see that it wasn't answered there, submit your question, because then you get in the queue and every question is being answered in the order that it was received. You will be answered. I know that's not sort of a satisfying in this moment answer, but it's sort of doing the best that they can with what they have. Let's see. Follow up to the employee with young children. Could this employee that you answered earlier, could this employee possibly leave the stabilization program and go into unemployment without the center losing qualifications? their qualification, the center qualification for the stabilization program.
Yeah. No, I was just going to tell Taylor to.
I think somebody is not on mute. Okay. Is there anybody who wants to take that one? I can speak briefly to it.
Brenda, once you start, then I'm happy to jump in as well.
Okay. So we know that sometimes family situations or family decisions change after a decision has been made. And so if you have somebody leave, you can still participate in the stabilization program. You are filing every 2 weeks the information that is current for that time period. And so you would just change the information when you submit your 2-week report on the job form.
Thanks,
Anyone add to that, Trey?
No, I think that is a good response.
Okay. I am a small program with employees, but no one works full time. I don't have a policy on FMLA leave. Am I required to?
You're not required to have your own policy, but you are required to follow the law and understand what an eligible employee is. An eligible employee can include part-time employees. I think the standards are 12 months of service and something like 1,250 hours of work. I would guide you to the U.S. Department of Labor to download a copy of the Family and Medical Leave Act guidance for employers.
Sorry, I'm simultaneously answering a question. Let's see. Is there currently a plan for summer programs? Should childcare programs be thinking about providing care for school-age children until these programs start, or perhaps for the whole summer?
Well, I think this is another one of those areas where we just don't know. And it's really unclear what school-age children are going to have available, what the schools are going to be able to do. And this is goes across to the supplemental nutrition and school feeding programs that we don't know whether or not they're going to fall off in the summer. I think it would be good citizenship to consider how your program could flex to help your families who have older children as needed, but it's a bit premature to be able to know exactly what will be allowed, A, or required, B.
And I can tell you that those questions are being considered right now by the CDD. They want very much to give guidance in a timely fashion, and they also feel like they have learned from the first rollout and sort of the inability to know. And so they're trying to be really mindful of all angles and considerations. We have another question here. Is the federal $600? Wait, where did that just go?
I've got it here. So we've got two questions about taxable income,
Yeah, thank you.
whether or not the stabilization program and whether or not the federal $600 for PUA are considered taxable income.
As far as the stabilization, yes, that's taxable income. That's really considered no different than if you were up and running and the parents were paying you. So yes, that is taxable income. And the $600 reference to the additional unemployment, any unemployment is taxable. So that 600 would be considered taxable income, yes.
Steve, is there any, I mean, as we think through across all the different programs that we've mentioned today, and people are planning ahead and thinking about type of income, it seems to me that almost everything that we've talked about is going to be taxable as ordinary income. Are there any exceptions, or, you know, I mean, you noted these in your slides, but just as a quick review, what's different now, if anything?
Well, first of all, we want to see, hopefully they'll fix the PPP forgiveness situation, and make that a true non-taxable event with the expenses being able to be deducted. But if they don't, just bear in mind that you lose those expenses, even though you don't have to take in the income. It's a wash. It's as if you took that PPP forgiveness in as income and you deducted the expenses. So it really doesn't benefit you that much. As far as any grants are concerned, generally those are going to be taxable income if you don't have to pay it back. The employee retention credit, again, that is going to inhibit you from taking expenses against what you took in there. So I guess the long answer to your short question, Trey, is anything unless otherwise noted that you received that doesn't have to be paid back in the form of a grant or a credit is most likely going to affect your taxable income.
And just to reiterate what you said earlier, that's why we asked Steve to join us today, and that's why he put together a whole slide about record keeping and planning and making sure that you really understand the implications of new types of revenue that came into your business, especially at a time where you may have costs that are different than you did last year when you filed your taxes. So, as he noted before, you may have the same payroll that you had, or more or less the same payroll that you had, but other expenses that balanced out your income last year are gone. You're not paying for some delivery of goods, or you're not paying for some other payment that you normally would make in the ordinary course. Now you go and file and you've got a bit of a surprise. So it's right now is the time to start documenting what's different on both the income side and on the expense side of your operations.
Keep excellent records. There's a question about the stabilization program and sort of where it is in what stage of process is it in, and I think this is potentially referring to is there going to be enough money to continue this, and perhaps do we know maybe for how long? I think the short answer is we don't know for how long, so therefore it is a finite pot of money. Trey?
That's right. Brenda, you're right that it's unpredictable in terms of the final outcome, but we have not heard any cap or sort of, we're only funded till this date or we're only funded to this dollar amount. Right now, it is a commitment that the state's made. I think that if the, closures were to continue or to be, if the order was rescinded and closures and facilities open and then had to close again, we might be in a different situation. But I think we can count on them to continue doing this through the next 4 to 6 weeks, if that's what it takes. After that, I think we're going to be in a different situation. The cost per week is pretty high, and the how money will be appropriated to backfill those costs ultimately is also something that they're still working on. They're trying to understand how the money that came into the state under the CARES Act, the 1.2 plus billion dollars that Vermont received, to what extent is that even eligible? Because it was not meant to pay for costs that were incurred previously, or that the state had previously budgeted rather. So this does not look like something like that, but we don't know yet. So if that federal money can underwrite the program, I would think that helps to keep it moving for a longer period of time. If it can't, I think that's going to be, in the longer run, kind of problematic.
We had a question about dependent care accounts that I wanted to make sure we got in here too. The question was, should we continue to give parents receipts for dependent care, or should we wait until there are further clarification from the IRS? John?
Yes, you should continue to provide a receipt. You're not making any assertion as to whether or not that payment is going to be eligible for a deduction or a credit under the Dependent Care Assistance Program. That will be a determination that the parent has to make. But in the meantime, you want to provide a receipt for the payment that you've received. And the consideration there is for retaining that slot for that child. Steve, do you have any additional comment on that?
No, I would concur with what you said, John. Again, since you're not making an assertion to your customer, your client, I think give them a receipt that proves that they did pay you, and where it goes from there is kind of up to them.
Thank you. I'm going to ask one more question. I'm mindful of the time. Someone asked if I'm participating in the Paycheck Protection Program and I'm keeping my staff and paying them as they provide remote classes and activities, but I let one employee go because their job is no longer needed. They were one-on-one para for a special ed student, and they're closed to in-person classes, so that person was no longer needed. So would I have to rehire that person to get the PPP forgivable?
Well, first of all, the PPP forgiveness is not all or nothing. So in that particular situation, if you didn't rehire anyone to fill that slot, then you might have a small piece that you wouldn't have forgiven. So again, that's a popular misconception that it's an all or nothing. And it's not an employee by employee situation either. So if you hired another offsite classroom person that's going to be doing online education, and they fill the same full-time time slot that person that you let go fills, that counts towards your head count. It doesn't have to be you have brought back the exact person that you let go.
Thank you. There are a couple of other questions and we will definitely answer them. We don't have time to get to them now, but we will answer them to the best of our ability, and the answers to all of the questions will be posted after the webinar gets posted. Thank you so much for your questions today.
And Brenda, I'd just like to clarify one thing I said earlier. I referred people to the federal DOL website for the Family Medical Leave Act, which is true, but there are also state leave requirements as well relative to paid sick that are not the same as federal. So you should check the state Department of Labor as well as the federal for clarification on what your obligations are for leave.
I'd also just mention, refer to websites. There were a lot of questions about the PPP, the Paycheck Protection Program, and the EIDL. The Vermont Agency of Commerce and Community Development has excellent web resources on those programs. So look to the ACCD site if you want more information. They have pretty detailed but very accessible background information on those federal programs.
Thank you, panelists.
You're very welcome.
Thank you, panelists. This was, you could tell by how hot the questions were coming that there are a lot of things on folks' minds here. So it's always wonderful to have such knowledgeable experts join us and be able to help us address those needs. And then thank you to all of you who registered today to attend. To those of you who are ongoing providing care to essential workers, to those of you who are just trying to figure out how to be ready to open your center back up or your family child care home when the closure order is lifted. We've said every week, and it bears saying every week from here on out, that we count on you so much and we really appreciate what you do. As Brenda noted, there's some questions we didn't get to, so we'll either follow up with you individually or we'll do another response to FAQ. And as we close here, I just want to note there's a bunch of resources here and reminders. So we do at the top of the list, let us know if you have an individual need or an individual question. We will help you navigate through this uncertainty. the division and Building Bright Futures. Their third of 3 webinars in April is tomorrow at 1 o'clock. So if you have questions that you want to bring into that forum and send either, send online or just take into the, whatever Q&A you're allowed to do tomorrow, especially if it's stuff that we talked about today that we suggested you follow up, please do. And if you find answers that you want to share with Brenda or Emily or me, that's terrific. We love hearing from you about your questions, about your answers, and about suggestions for future webinars. Just rounding it out, you'll see the reference here to the State Employee Credit Union emergency loan that we're helping to support. Let us know what you need there, and if there's any questions we can answer. And then there's the link again to the essential workers guidance, and a couple of upcoming webinars, including at the very end there, next week, the topic we have next week is the business of childcare, perspectives on where we are, where we're going on this at the state and national level. So we're really excited to offer that next week on part of this ongoing series, and we'll be doing more topics in May. So if there's something we haven't talked about that you think we should, related to the either business or human resources or legal needs of what you do, please send us that idea. And for now, thanks so much. We will see you next week.
Thank you.